The focus of today's video will be squarely on the outlook amid the ongoing semiconductor shortage, plans for the production ramp-up in 2 new factories, and updated guidance promised by CEO Elon Musk on the launch of new models like the Cybertruck. Last quarter's results will likely fade into the background because the company already blew census estimates for vehicle sales and production out of the water in the final 3 months of last year, increasing the gap to its closest rival and forcing analysts to begin revising their Q4 forecasts on the fly. Moreover, its operations are solidly profitable and business is booming. Seemingly long gone are the days when the EV pioneer could only swing into the black thanks to the lucrative sale of regulatory credits to competitors looking to offset their cars' tailpipe CO2 emissions. What does the future look like for Tesla though? And what does Edward Snowden have to say about the company? Find out everything in this video. Let's get into it. On Twitter, Edward Snowden stated that the price of Tesla shares are still too expensive. He tweeted this in reaction to Tesla CEO Elon Musk's tweet, in which he asked the public if he should sell any of his shares. Snowden isn't the only one who seems to think so. Tesla's market capitalization recently surpassed $1 trillion, but New Constructs, an independent investment research group, says the company is overpriced by nearly $1 trillion. CEO David Traynor believes the stock might fall as much as 88% to around $150 per share. After sales surged 87% last year to 936,000 vehicles, Wall Street analysts are starting to ratchet up their forecasts for 2022 from around 1.3 million to possibly 1.4 million cars or more. We think 2022 is the year where Tesla can begin to perform like a Terracap, Morgan Stanley wrote earlier this month, arguing supply constraints rather than demand will dictate its volumes. The year has not been kind to Tesla investors so far. After vaulting to $1,200 a share after the Q4 sales volumes were announced, the stock has fallen by over a fifth, close to just $930 on Monday, mainly due to the deteriorating macro environment. Growth companies have been hammered as investors priced in 4 interest rate hikes by the Federal Reserve this year due to soaring inflation. Bulls have tried swatting off unflattering comparisons to Peloton and Netflix, 2 former market darlings down on their luck, as well as concerns over potential surge in redemptions for Cathie Wood's ARK Innovation ETF, a major Tesla shareholder. That's why the immediate concern for investors is adding fresh capacity to reinforce Tesla's still very much intact growth story. With its original Fremont factory in California bursting at the seams and production in Shanghai hitting record volumes, they will be looking for clues about the start of production in 2 new factories in Texas and Germany. The latter has come under particular scrutiny due to regulatory delays with the local government. Another important issue Musk will need to shed light on is the status of Tesla's futuristic Cybertruck, which was first revealed in November 2019. It appears that the purported launch date has been pushed back once more and is now scheduled for the first quarter of next year, whereas it was initially advertised to come out last year. That means Tesla, rather unusually, will be later to the market than some of its competitors who have risen to the challenge. Recent plaudits won by Rivian R1T, the launch of the GMC Hummer EV pickup, and this year's anticipated arrival of the Ford F-150 Lightning could all tempt Cybertruck reservation holders, dejected by the prospect of waiting another 12 months for the Tesla. The first warning sign came in October, when the Tesla removed the model entirely from its configurator. Most fan sites now expect the entry version, costing $39,900 with a single motor, will be scrapped in favor of adding a new model at the top-end range, with 4 motors to better compete against the R1T. Another key model underpinning Tesla's growth story is what some are calling the Model 2. Investors got an updated timetable for the launch of the model announced back in the company's Battery Day presentation in September 2020. In January 2020, the stock market valued Tesla Incorporated at $117 billion. By the end of the year, the total had climbed to $658 billion. Tesla's shares subsequently surpassed the $1 trillion market cap level in less than a year, on October 25, 2021. Tesla's stock price has soared in a short amount of time, confusing investors. It also begs the issue of whether the same factors that propelled Tesla to a $1 trillion valuation during the pandemic will allow the business to sustain its momentum afterward. While private investors and CEO Elon Musk's tweets have supported Tesla's meteoric ascent, the Financial Times reports that there's a Tesla financial complex at the heart of the electric vehicle maker's rapid rise. Tesla's inclusion in the S&P 500 index in December 2020 has increased funds following the index exposure to the company's shares, and they have reaped the benefits of the stock's price climb. The company was admitted to the S&P 500 with a 1.6% weighting. It was weighed at 2.5% of the index in the beginning of November 2021, and it generated roughly 1/4 of the index's performance. In November, Tesla accounted for 4% of the Russell 1000's overall weighted, similar to the S&P 500. During times of excess, fundamentals take a back seat. The same has happened with Tesla. From January 2019 until now, Tesla's stock price has gone from around $60 a share to over $1,000. This means a Tesla investor who bought $1,000 worth of the EV maker's stock has seen his/her investment grow 16-fold to $16,000, though the stock seems to be on the decline now. In comparison, the S&P 500, an index that includes 500 of the top publicly traded US corporations, has returned 90% in the same 3 years. This implies Tesla has outperformed the market by more than 17 times in the last 3 years. Tesla's meteoric climb has resulted in tens of billions of dollars in losses for individuals who gambled that the EV maker's stock price will fall by shorting the company's shares. Many believe the Austin, Texas-based electric vehicle manufacturer is only getting started. Cathie Wood, CEO of ARK Invest, is the most well-known of these Tesla bulls. Tesla's price objective for 2025 is $3,000 per share, according to ARK Invest. If ARK's prediction comes true, Tesla's stock price will increase thrice in the next 3 years. That $1,000 invested in Tesla stock back in 2019 will be worth $50,000 in 2025. Tesla's already astounding $1 trillion valuation will rise to $3 trillion. In comparison, Toyota, the world's second most valuable automaker, is presently valued at $300 billion. However, hints have begun to emerge that Tesla's CEO Elon Musk is not one of them, at least in the short term. Despite Musk's repeated claims that Tesla stock's price is too high, the EV maker's shares have continued to grow, and Musk appears to have accepted this reality. Musk's dissatisfaction with Tesla's stock price right now has less to do with the performance of the electric vehicle company he started and more to do with the larger stock market and economy. Finally, one last key topic might be discussed: China. Tesla sold some 70,000 cars to customers in the world's largest EV market in December. That was roughly a third higher than their previous record for the month and powered the brand's Q4 global performance. Investors will want to know how much of that is sustainable, as a portion of that is no doubt demand brought forward as owners wanted to take advantage of generous Chinese subsidies for EVs before they were slashed in January. That could mean a weak start to the year. Tesla was founded in 2003 by a group of engineers who wanted to prove electric vehicles could be quicker and more fun to drive than those powered by gasoline. It launched the Roadster 5 years later, giving the world its first look at the company's battery technology and powertrain. As well as going to launch a fleet of electric vehicles, Tesla has also launched scalable clean energy generation and storage products. Tesla believes the faster the world stops relying on fossil fuels and moves towards a zero-emission future, the better. Given how far they've come, it is sure that despite doubts, they will find a way to break records and shock their competition. When looking for TSLA stock predictions, it's important to bear in mind that analysts' forecasts and price targets for Tesla stock in 5 years can be wrong. Analysts' projections are based on making fundamental and technical studies of the stock's performance. Past performance is no guarantee of future results. So what do you think about the future of Tesla? Let us know what you think in the comments.